Good morning, everybody. It's happy Friday, July 6th. It's been kind of a slow week with the July 4th holiday bisecting the week pretty much. And of course, in the spirit of July 4th, I took a picture of the flags that I have in front of my house, and one of them is the old Bennington flag, which is the snake with the "Don't Tread on Me," I guess you'd call that a motto. And, that's a very popular revolutionary flag, and I like having it, especially these days. I think it's very appropriate in the era of big government, and I would say the era of big government coming from both sides of the aisle. Today we're seeing the market pull back, and I think that makes today's webcast somewhat more relevant. So we got a little bit lucky there. We were thinking we would wait until after the jobs number and see what's shaking at that point, so we could put out a webinar in real time and give our view on what's happening. The one underlying theme that I'm looking at as a rationale for an upside rally is what we would call a Romney rally, and it's similar to the Reagan rally that occurred in 1980. That rally, I think, ran from about April of 1980 to November, right up to the election, and then right after the election, the market rolled over. So what the market seemed to like at that point in April of 1980 is that they were seeing some change from the malaise of the Carter administration, who wasn't getting anything done. And for those of you who lived through the 1970s, you might recall that it was the end of the world. Japan was going to overtake us, and Japan was the new model for economic success, blah, blah, blah. And of course, we know where all that went. But at the time, the market saw an inflection change or potential for an inflection change in policy. And that was the basis for a rally. And it was a pretty decent rally, and you could have made some pretty good money. But once Reagan was elected, then the question becomes, okay, now what are you going to do? And so the market goes into a correction after November of 1980, and I think that extends for about the next year. And waiting to see what exactly Reagan comes up with, what sorts of policies work to get the economy going. As we know in hindsight now, a lot of defense spending came into play, tax cuts, deregulating both the airlines and gas and oil prices, and letting the markets do their thing. And I remember at the time gas getting up to about $2.28 a gallon, I believe. I could be wrong, but it was ridiculously high price. And then it did come down after Reagan removed the price restrictions on oil and just let the markets deal with it, even though in the short term there was pain. But it did work. But in any case, the whole point is it's not about politics. I know we get a couple of cranks who email in calling us right-wingers, but to me, when you start calling someone a right-winger and you don't really know the genesis of their political thought or their evolution in terms of their politics, you're just spewing baloney to me. So we always like to get a big kick out of the occasional crank who is going to email us calling us right-wing nutcases and blah, blah, blah. So I should mention, though, in my early 20s, I lived in 2 communes, one of which was an organic commune where you were not allowed to have any packaged food. And so we grew a lot of the food in the backyard. There's a house in Palo Alto right at the corner of Gwynda and Palo Alto Avenue, right off the San Francisco Creek, for any of you familiar with that area, and of course the whole Silicon Valley area. And from there, eventually we got too many people in there, and you started to get the free rider concept, and that kind of broke apart. And then I went to a feminist commune where I did a lot of work for the San Francisco Peninsula Battered Women's Support Network, and a lot of that was moving women out of houses or apartments where they were shacked up with some really twisted men who were just, in my mind, is a really disgusting thing to see. And so that was some of the things I did when I was younger. I've been a libertarian all my life, so the idea that I'm a right-winger, Dr. K and I pretty much agree on most of our political views, and I think he's as far from a right-winger as possible. Aren't you, Dr. K? Are you a closet right-winger? That's all I want to know.
I'm proud to say that I am certainly not, and I much prefer the libertarian school of thought has always been something that works with my train of thought. And
sure.
I know a lot of objectivists would say, well, objectivists aren't libertarians, but that said, there's a lot of principles that overlap with the 2 theories, and I understand why objectivists are probably 99.9% in agreement with libertarian thought. So for all intents and purposes, right, I would call myself a libertarian.
Right. So, if anybody's offended by anything they want to view as political, we tend to view, from an objective standpoint, the policies of the current administration and Congress as being a detriment to economic growth and also to business decision making. And we know, being small businessmen ourselves and knowing a lot of other entrepreneurs and small business people, and also the polls show that a lot of them are sitting on their hands because the environment is uncertain and you don't know where the government is going to come at you next. And I think that is really the issue here. And I think if the market saw some inflection point, it may not even materialize into something, because I know one of the emails we got from somebody who was miffed that we talked about a Romney rally as if we're hoping for a Romney victory. My view is he's probably no more likely to solve all the problems we have than anybody else. And we certainly don't hope for any particular outcome, but I can see that the country is probably leaning towards some real change this time around. And so based on that, we think you could have a rally. Okay, so forget about the politics. It's all about making money in the markets. Or as that bald-headed guy on CNBC likes to say, I'm not here to make friends, I'm here to make money. That's kind of where we're coming from. So, and if you want to send us emails and argue politics, we don't really get into it when it's not our thing. We may just mess with your mind, so be forewarned. But in any case, I love this flag, and my kids like it as well, so we like putting it out in front of the house on July 4th. So I hope everybody had a great 4th, and we're back to watching the market today. But let's just look at a few things going on. You had a very sharp move over the last prior 5 days from actually last Friday or was that last Thursday? It was last Thursday, wasn't it? Yeah. And this one all looked lost, as you recall, on the NASDAQ chart here, looking at the NASDAQ daily. All looked lost intraday. You know, Obamacare had been upheld by the Supreme Court, and oh my God, it's the end of the world. And I don't think anything really is the end of the world. I tend to think a lot of that kind of stuff is exaggerated too. Humans will find a way to persevere, I think, no matter what. But you're going to have good economies, bad economies, lukewarm economies, and I think with some change coming into the White House, or at least the market perceiving that, I think that's what happened on Thursday, and I think that brings the focus on the election and the fact that, and I think even the Supreme Court said, I saw a quote, I don't know if that was actually from one of the justices themselves, but they said that they're not going to go in, and if you choose bad representatives in government to make these laws, then it's up to you to vote them out. I think that's where it brings the focus. So we'll see what happens in the election, but the market could, and it looks to me like on that basis, that sharp rally in the face of that decision, to me, is a huge contrarian signal, and it tells you that the market sees something else other than the bane of continued Obamacare, or the law that we pass without ever reading. So, and I would also say to those of you who are supporters of Obamacare, I think you're entitled to your view that providing health care in our society is something that we should set as a goal. And I don't necessarily believe that letting the government run it all is a solution. And the example I would use is the PC. If you look at the PC, I remember getting my first PC. It was a 486. It was fast at the time, and it was 1993, and it was a Gateway, as I recall, and that thing cost me $2,600, as I recall. Now you can spend $300-400 to get a computer that's about 50 times faster and about 100 times more disk space. And I think if the one thing we're missing here in solving the healthcare crisis is looking to entrepreneurs to come up with ways to institute technology or use technology to bring healthcare to everyone, and affordable healthcare. And it's the same way that we brought affordable PCs to everybody. So I would urge people to consider that rather than the government solution and the whole national healthcare thing. I think if Congress wants to pass national healthcare, then they should also be required to use it as well. They have their own healthcare system or their own healthcare plan, while the rest of us get stuck with Obamacare. I think you want to create a good national healthcare plan. Then I think the first thing you do is have Congress forced to use the plan that they force the rest of us to use. But of course they won't do that because the ruling class is the ruling class, whether they're Democrats or Republicans, and they're going to take care of themselves first, and they could really give a poop about the rest of us. That's my view. So maybe I'm a cynic, maybe I'm a right winger, maybe I'm a left winger, I don't know. I actually have two wings, but we won't get into that. But all that's to say is we had a nice sharp rally on that basis. So you can kind of think through it and see the market's rationale. You don't have to agree with it. For all I know, you have an Obama shrine in your house, and that's fine too if that gets you going. Personally, I have an Obama, Bush, and most presidents dartboard in my house, but that's just me. And you can see today what we got here is a gap down on news. So you have a bad jobs number. Well, you knew that was coming. I think that was pretty much telegraphed. The Fed, though, has stated that they will, if unemployment rises above 8.2%, they will come in with QE3. And I think the price of gold. What's gold doing today, Dr. K? Where are you, gold?
Right around. I mean, it's off at 1.3%, but we're at about 1588 on the futures.
Yeah, so you're pulling back, but it's really gold just been hanging out in here and not really going anywhere. So it doesn't really look like there's any trend really developing either way. So we're not buying gold. We're not really into it just yet. I'd like to see it break out probably through 1640 as a viable spot. But all you have now is you have the market running in this up channel or channel right now. Just draw this. You know, it's rough. Technical analysis 101. The magic of technical analysis. Look at that. It goes right up to the rising upper trend channel line and then pulls back, so it's probably going to bounce off of here, right? Or pull back to the 50. I don't know. I just think that within the context of this incredibly sharp move to the upside, things look okay, and you're entitled to this pullback. Okay, so that's kind of how we're viewing it right now. So I like somebody said I'm not left wing. I'm just wingy. Yeah, I like that. He must be a left winger. He must be one of those radical left-wing hippie types. In any case, you can see the pullback here. I think you can even pull back to the 50-day. That would be normal. So that's kind of how we're looking at it right now. In terms of stocks, and of course we'll let you all ask your usual questions. I've drawn too many lines again. Let's just take a look at some of these things. So we got a daily chart up here. I'm going to just go through some of the stocks that I like right now and that have been acting pretty well. I think Facebook looks okay. You have a pullback here on very light volume. You see the volume drawing up yesterday. That's actually, not yesterday, I'm sorry, but on Monday, 4 trading days ago. And that's actually the lowest daily volume the stock has traded since. And that was your low. And you made the low. Now you're rallying, trying to get up to the 10-day moving average. So what we're watching for here is... oh, he's a Canadian. Okay, the person who called me wingy is Canadian. So I think very cool. Canada's got their act together. We like Canadians. All of you all talk funny. But in any case, we're looking for a pocket pivot through the 10-day moving average, which I think right now is about 31.79. And you'd be looking for volume that's higher than this day, which I think is about 20, what do we say, 29,500 or something like that. Just making an even 30 million. And you'd have a pocket pivot. Now, they come out with earnings on the 26th, but you'd have to say the stock is forming a decent pattern. Don't count these 3 days. You know, these are probably all the hype and hate days right here. So now you've come up to resistance here and pulling back on very light volume. Not really much buying volume. It might go sideways, but if you did get a pocket pivot through the 10-day, that looks okay. So we noticed the building group has been pretty strong, and of course, Eagle Materials is one name I picked up on a gap up here. So, Dr. K, is that a viable gap up?
That would be a viable gap up, yes. And
so you get
viable gap up new highs as well.
Yeah, so you know, it's holding up pretty well. And you've seen a lot of the housing stocks break out and move higher. There's Ryland Group. We have Pulte. Let's see if I can remember them all. Toll Brothers. What are the other ones? PHM Lennar is another one, and you know, all these have pretty much rocketed to new highs. That's also brought this Fortune Brands Home and Security came rocketing off the lows, but there's really nothing there we would buy. But I do note that there is strength in a number of these stocks, and they seem to be acting okay in that area. So is that telling us that we're getting a turn in housing? I don't know. It probably is telling you that things maybe aren't as weak as we might think, or that the market is seeing some sort of development that is going to produce a turn. So I've been looking at this Seattle Genetics. I actually own a little bit. This is a daily chart, and you can see this thing ran up very sharply and formed. This is about 3 weeks tight in here, and then you had a pocket pivot on Monday. Somebody downgraded the stock and picked up volume in reverse, so it got strong support. Now you're kind of drifting in here. I think it looks viable along the 10-day if it holds it on the basis of this pocket pivot, but it may not launch out of here. These guys are losing money, but they do have a drug. Let's see if I can remember what's going on here. They make what are called antibody drug conjugates, and I'm getting this off of seekingalpha.com. You can read all about pretty much any company. They have a drug, Adcetris, which deals with lymphomic forms of cancer. So, and anybody's a doctor out there, don't scorn me for not pronouncing any of these right, but Hodgkin's lymphoma, HL, and then what they call systemic anaplastic large cell lymphoma. This drug has been selling pretty well, and they've got a pretty good pipeline. Apparently there's something going on. The other thing that's pretty interesting here is you got about 21.8 days of short interest in the stock, which I think is interesting. And again, we own the stock, but they're going to lose 55 cents theoretically in 2012. As of June 15th, 21.8 days of short interest at 1.4 million shares a day. That's over 30. It's about 30 million shares roughly short in this stock, and obviously the first move here is probably a big short squeeze, but it's holding in pretty tight, but we'll see how this thing goes. You can see the market's picking up, but Dr. K, we got heavy volume today, or are we trading lighter volume? How's that working right now?
We're a lot lighter on the S&P and just slightly heavier on the NASDAQ.
Okay, so that's kind of where, but I haven't seen volume picking up. But again, you're entitled to a pullback, so you kind of watch your stocks here, things that we have liked. Coinstar's acted okay, and straight up, so you get a pullback, just like the other pullbacks in the pattern, and it's pulling down. So that looks normal, not anything to get too excited about. This is my biggest position by a wide margin. I think it's about 80% right now, but it's really been moving and working. So you had a breakout here, and you notice how you really get one pullback into what I would call a breakout zone in here. If you're using this peak, I think it's 67.20 plus a dime to make it 67, and that's your buy point. I think that's just not the best way to handle it, because you can see the stock pulls below that consistently, and I don't really see that as the buy point. I think this is where pocket pivots prove their superiority over these standard issue based breakouts, and that is that you're buying the stock in here and taking initial positions. As it starts to work, you can come in and add, and this has worked pretty well. We went to all-time highs yesterday. KISS 78, I think it changed. There was a high there. Well, not quite. 77.69 at KISS on the high of the day, and now you're pulling back. You got some volume, but I could see it, pulling back into the 10-day and holding in there. It tends to be volatile, so it's acting the way it normally acts. But this is probably one of your strongest stocks in the market. Apple also among the big NASDAQ stocks that we identified pocket pivots on last week, has moved up 4 days in a row sharply, and then today finally we're getting a pullback. But you're above that 600 level. I might look to add to my position. We own this one as well. Might look to add to my position pulling under 600 if it gets there. Otherwise, you're sitting into earnings and seeing what happens after that. And just remember, you don't necessarily have to be in the stock into earnings. In fact, buying this pocket pivot here, you could be up 4 or 5% on a decent position. If you're making money and going to earnings, it's holding up, you could theoretically sell the stock and then wait to see if it does something like it did last time into earnings, which is issue a viable gap up. And you could have easily entered the stock here and then bought it in here and then rode the big move, okay? So, now we're kind of coming up to the 50-day over here, and we're long the stock, but we may not have to hold it through earnings if we want to lock in a gain and then actually seek to find the true trend if the stock breaks out or gaps up on earnings. But, a lot of people think it's late stage. I don't know. Dr. K, what's your take on Apple? Is it late stage, or where are we at? Here's a weekly chart showing the last couple of bases in here. What do you think?
Well, I'm not real comfortable on late stage analysis, simply because there are the couple one-off examples that will continue to go higher, and they just completely defy the crowd. Just simply because this whole late stage business is all about a company that really can't continue to make exciting new products, for more than, say, 6 years, 5 years. I think Apple might be one of those one-offs. I think that their cash hoard is just enormous, just massive amount of cash in their vaults, and they're still running their show quite brilliantly, in my mind. So I'm really loath to say, this is a late stage base and use technicals. If it were any other company, if it were a typical company that it's just, run the tide with a nice strong bull market, then maybe you can use this late stage analysis to increase your odds of calling a peak in the stock. But fundamentally, Apple remains very sound.
Yeah, and I would point out a couple things here too. Let's think about one thing here. Let's think of the NASDAQ Composite Index. If we go back to in August of last year, that was a pretty brutal correction, if you guys recall. And the model actually did really well back then, because I think it caught every single inflection point. It caught the sell signal here, I think it was, and then every single inflection point almost perfectly. Of course, that's been a different story so far in 2012 in this area. But there's a couple things I want to point out to you. If you're using the market direction model and you're whining about what it's doing instead of dealing with it and understanding what you're doing with the market direction model, you're essentially missing the point, I think. And that is that if you're using the MDM to trade the market or to capitalize on market trends, then you're using a trend-following system. And I would suggest reading Michael Koval's book, The Little Book of Trading. I think it's Trend Following for Big Winnings or something like that. And he talks about the whole essence of trend following and using a system or model to ride trends in the markets, whatever market it is, whether it's the dollar, the stocks, commodities, whatever. And you have to understand that you can have drawdowns. And he writes in the book that your account may go from 100 to 200, but it might have to go to 60 first. And that, I think, is the case with the market direction model. So it's always interesting that if you drop 10 or 15% with the model over a few weeks, even people start to call Dr. K names, and one guy's saying it's a wealth destruction model, and there are other things he could say, but he's not going to say them. And I would say, you're kind of off track there, pal. The bottom line is you're using a trend-following system, and you're going to get bad signals in certain environments. And Michael Koval's point in his books, and all of the books he's written on trend following, is that you have to. The number one failing of anybody using a trend-following system when it starts to issue a series of bad signals, that they give up on the model and they stop following the signals, and then what happens is you get that one big signal where the market rips to the upside and you're sitting there with your finger in your ear, okay? And I think that's the key. If you're going to use the MDM, understand what you're doing, okay? It's not some magic system that's going to make you magic money, and I know a lot of people out there seem to approach investing in general, or even when they're seeking the guidance of anybody who's a professional or with experience in trying to teach people like we are, you're expecting magic, and somehow something is infallible. But you really need to understand that it's really all about discipline and using a system, understanding what you're doing in the markets, what your objectives are, and what sorts of drawdowns can occur. So even though I'm probably Dr. K's biggest critic when it comes to this model, and I think that's healthy internally because it makes sure that we're always vigorously subjecting the model to argument and thinking over where might we be wrong and how to improve it possibly. I think that's a healthy process, but I still would defend it on the basis of what it is and what you're trying to do by using it. It's not a magic profit system. And I think you should review all the results going back in history, as well as the types of drawdowns that can occur. And they can be hairy, at times. So we're down for the year with the fund we run that uses the MDM, but we're going to stick with our system because we feel we'll get one good signal and it'll be running well. But if we sit back and try to cherry pick the signals, and that was something we were trying to do briefly there, I think ultimately you won't let the model do what it's supposed to do. So again, if you can't stomach that sort of volatility and those sorts of drawdowns, then just blow it off. You shouldn't be doing it, okay? And it's not a matter of calling people names or getting mad at Dr. K or getting mad at the market or getting mad at all. It's about understanding what you're doing and acting accordingly, okay? So let's see. So I want to go through some more stocks that I like. Now, one thing I do want to notice is you had this sharp pullback in August of last year. So, this could qualify as a bear-type market. Now, if we look at this base, this is a base that Apple came out of. You got a cup with a handle here. Forget about this noise over here because this actually undercut, got here down into the lows of this base. I don't know, did it undercut? The low there is 354.24, and the low here is didn't quite, but you basically cleaned out a couple of times, bounced off the 200-day moving average, and you set up. So coming off of this decline here in August in the market, okay, in August of last year, this could be arguably a first-stage base. Now, if that's the case, this is a second-stage base. And as I've talked about in these webinars many times, a lot of times the biggest moves occur off the second-stage base. And personally, I can tell you the biggest money I've made in the markets, the times when I made big money on the long side has been when I'm buying stocks mostly off of second stage patterns, and that's where they have their big moves. So if that's the case, then maybe Apple is set up for another move from here. So I don't think you can assume anything about it being A, late stage, or B, the law of large numbers is now working against them. Yesterday I went and bought my daughter a Mac Air for her birthday, and I got to tell you, that's one heck of an elegant machine and a beautiful machine. I was actually jealous, and so in order to make up for my jealousy, I bought myself a new iPad, which is pretty cool too. But in any case, the guy there, we were talking, and he said the one thing where they think they're going to grow and where they're seeing in the store itself an increase in sales is in the PC side. And they only have 10% of the PC market, yet they have technology that I think is vastly superior to anything that Windows offers. And I personally hate Windows machines just because we run a lot of heavy-duty programs that use up a lot of memory. and use up a lot of bandwidth, and these Windows programs are freezing on us frequently, and that really drives me nuts. So I would move to a Mac in a second. I'm finding out that there are some there's an emulator that you can use now to use Windows on a Mac, and so that next time my PCs die, which seems to be frequently these days, I may cycle into that, and then maybe that's when Apple tops. But anyways. LinkedIn is, so I hope you got my point on Apple. This could be just a second stage base, and you can't make any assumptions about late stage. And in fact, we tend to believe that statistically the whole late stage thing is not all that sound to rely on. So, I mean, it's good to know where you are in a market cycle, where a stock is in its life cycle as well, just to get some reference points, but I don't think you can draw any pat conclusions just simply on being able to call something late stage. So. Somebody makes a point, I think this is a good point, that there's a key difference between 1980 and now. You came out of a bear market and a recession, and this year you have a 10% correction and no recession. Well, I would argue that we've been in a recession since for the past 3 years. Unemployment remains over 8%, jobs growth is sluggish, and most of the jobs numbers are manufactured anyway. So I would say we've been in a recession. But yeah, it's not exactly apples to apples. That is true. So. But there are some similarities, and one of them is that in the 70s the market went mostly sideways. In the 2000s the market has mainly gone mostly sideways. So there are some similarities that it doesn't have to be apples to apples, but I do think you still could get a Romney rally. So, and you know, call it whatever you want. If you don't like Romney, call it a change rally, a real change rally. So. And it is a problem that half people in this country don't pay taxes. Nobody has a stake in government, so all government is to these people is a goodie issuer that says if you vote for me and you'll get goodies and you'll never have to pay taxes. So LinkedIn is building a sort of a cup with handle type pattern. It's acting okay. Let's see, is this a daily chart? This is a weekly chart, so we want to look at it daily here. And you can see it's holding the 10-day moving average on the pullback today. You had this pocket pivot here. We talked about this last week. It's just kind of hanging out. It's probably going to be a matter of what it does into earnings or on earnings. So Priceline, you can see, like Apple last Friday, had this pocket pivot up through the 10-day moving average. But notice that it's below the 50. So this is weaker. Apple's holding up a lot better here. And you see the other ones. Amazon was another one that had a pocket pivot. And it's actually holding up better too. It's higher up in its pattern, and despite the fact that everybody wants to short Amazon, all it's doing is building a sort of a cup formation right now. So it's acting okay. Intuitive Surgical is a little weaker here, pulling back hard. But these things run up sharply, they pull back sharply, and it's kind of, as Dr. K says, the riptide market, and you see the tide just coming in and out and pulling things back and forth. But there is a trend that is developing in most of these, and that's really what we're out to play. On the biotech side, I was pointing out the Seattle Genetics, Alexion, sharp move up, now pulling back to the 10-day moving average. It's extended from the breakout here. That's acting okay. I mean, all these stocks are pulling back, so if you're asking us whether you should bail out, you would bail out if it hits your stops, and if you set a stop loss or a trailing stop, that's really what you have to figure out. And I don't really think there's any magic levels. Once you're up and away, some of these things might require a little room to swing around. So you get something like, I get into something like Mellanox in here, and come in and start buying it off of here and in here. Now you're up here. I'm way up on this thing, so I've got a lot of room to sit. And just a few days I can run up 20% in 5 or 6 days when I'm in that heavy. So I've got a lot of cushion to work with. If you don't have so much cushion, then you probably have to run it tighter. But I would think that if this pulled back into the 10-day, that might be a spot to look at it. But I think what I would be looking for here at this stage would be the next buy point, and just kind of rely on that. You can see the market's just coming up a little bit more. SYNC is one I've seen. Synacor is, these guys I think have a system that allows media companies to put their movies up on the internet. Is that right? It's like a package online content platform that allows them to combine TV shows and streaming music and all kinds of fun stuff. And so this company has been, it's breaking out today, and I don't know, would you buy that, Dr. K?
Well, the pattern looks good. The fundamentals are fairly sound, so it is. I would say it is actionable, in this kind of environment. Sure.
Yeah, it's coming out of I guess you call this a 5-week little base here, but it's kind of a little base on base kind of formation. It's a new issue, so it's an interesting story. They do have competition, but you notice it's like a base on a base on a base. Not a lot of tight closes here, but it is trying to come out, so it's acting okay. That acts all right. Let's see. Yeah, so nice fundamentals on that one too, so not bad. Someone says, is your screen working? Is anyone else still seeing "Don't read on me"? No, "Don't tread on me." But I did take that off, so you should be seeing the charts now. Somebody says giving money and power to government is like giving whiskey and car keys to teenage boys. I think so. Let's see. Someone says nice pipeline of molecules for SGN though. They do have a nice pipeline. We talked about Facebook, QCore. QCore has been one of the stronger acting biotech, so it's up and away, breaking out here. So you could pull all the way back in to the breakout point right here. So that's a possibility. But I'd look for it to hold up. But it's still, you broke out and you're holding up, so nothing else really to do. On this one, other than sit and wait for the next buy point. What is a one? Somebody says Dr. K has been in England too long. What is a one-off stock, mate? What is a one-off stock?
I've heard that expression different parts of the globe, so I just picked up on it probably a few years ago, actually. But one-off just means the exception. It's the exception to the rule. So
Yeah.
Apple, I would say, would be the exception.
Yeah. Let me talk about ROST. ROST. Okay, this might be good to go through. Let's see. They're saying here. Listen to this, Dr. K. So I sold ROST on 6/29 as it appeared to be breaking the 50-day moving average and took a 40% profit. Too bad I missed yesterday's big move. Do you have any advice on my trade? Well, I can see it right away. Dr. K, can you see that on Ross Stores?
Yeah, okay, I'm seeing that.
So on that break of the 50-day here, he got shaken out, and then he didn't come back in here. But I wouldn't come back in here either if I'd gotten shaken out. But I see a couple of things right away. Do you see them?
What day did he buy?
Well, he had bought it lower, so he had a 40% profit when he sold it here. Okay, but the one thing I noticed right off the bat is this: if you were using the 50 days, you're selling good. You actually never violated
Right.
the 50-day moving average. And if you're using the 10-day as a tight stop or something on this, or even the top of the breakout here, you would have been out quicker. So then you might have been able to come back into the stock. I'll do that sometimes, and if something starts to break down, I'll either cut it back or blow the whole thing out. And if it does, if it fails on a breakout, so this thing is trying to break out here and it fails here, I'll blow a piece out, and then if it turns around, I'll come back up. And I would say, I'm kind of looking at that with Mellanox here. It kind of broke out of this pattern. If it kind of fails through the 10-day, then I'm probably going to be cutting the position back sharply and looking to re-enter if it sets up again. And that's pretty much how I'll operate with that stock. So, but I think that's one way to do it. I think what you could have done, and hopefully this is helpful for others, is that if you have a stock and it breaks down, use the top of the breakout area as a guide. If that fails, then cut back half or more, and then look for it if it gets support, big volume support, and starts to come up. And the market turned last week. You could have possibly come back into the stock. This is kind of almost a weird gap up that has all the Bible characteristics of a gap up, but it's in a bizarre position. But it does get it back above the breakout point. So there's ways, I think, to handle tighter stops, and then also have the flexibility to come back and buy the stock back if it starts to get back up and show some strength. And it doesn't matter if you buy at a point lower than where you sold it, because the idea is to get back on the trend and ride that puppy. And so I think that's where you could have improved on this trade in terms of using either a tighter stop, or also if you were using the 50-day moving average. And if you're up 40% on a stock, you probably have the luxury of letting the 50-day moving average force you out. So you could have waited for a violation. The fact is you never had a violation here. But if that scared you, then you should think about, at least for your own psychology, instituting tighter trailing stops. And being an aggressive trader, like I'm telling you guys, I'm long 80% position in Mellanox, and some big positions and a couple other things. I do that, and if I'm adding, and I'll just show you, Mellanox, just give you an idea how I handle this. Take a little position in here, it doesn't hold up, sell it. Then you get another pocket pivot, then I buy it here. It runs up, you have a little pullback here, another type of, where's the other pocket in here? So you could be adding it here. Then when it pulls back, it doesn't hold the top of there, so you sell it, but it gets good support here. You can buy it back and then work back into the position here. And as you're coming up, you can come back into it again heavier. So I'll kind of do that and kind of dance with the stock a little bit, especially when something's pretty volatile. But the whole idea here is any stock that I'm adding in here, I'm using the 20-day moving average as my stop. Now I'm using the 10-day as a trailer. So if the 10-day gets busted, I'll probably just cut the position. Anything I bought up high, I would cut out real quick and then look to possibly buy it back if the stock stabilizes. But you got to be active. Remember, I was on Fox on, I think it was Tuesday morning with Stuart Varney, and talking about the Facebook trade that I made and how that worked out real well. I got 20-something% real quickly and then dumped it, and then look to come back on the dry up on Facebook as the volume dries up. And as I pointed out to him, the thing that investors in the stock market should learn to use to their advantage is the fact that the stock market is liquid. It's not art, and it's not real estate. It doesn't take you forever to sell it, and you don't have to put anything in escrow and work through several bids over the course of several weeks before you dump the thing. They're stocks. You can sell them today, and you can sell them right now and buy them back 5 minutes later, and sell them 10 minutes later, and then buy them back 20 minutes later again. Over and over again until you run out of day trading power. But for the most part, you have the luxury of liquidity in the stock market. I don't believe there is any reason not to use it if you are uncertain. Okay. And you want to devise methods for yourself and systems for getting yourself out on tight trailing stops if you have trouble sitting on sharp pullbacks, and then coming back in and just kind of working it that way. So, it all comes down to how well you sleep at night. And if you don't have really deep pockets like me and you can sit through, nice hairy pullbacks in 80% positions, then you've got to figure out a way that works for you. And there is no one size fits all. But I'm just giving you an example. How so even here, let me show you what I'm doing here. Nibbling on this dry up here. Okay, so now I'm taking a small position here. So now I'm looking to see if this thing gets a pocket pivot through the 10-day. That's when I'll add. On the other hand, if it violates the 20-day, I'm gone on that initial position. So that's one way I would handle that. And I tend to keep pretty tight stops on stocks, especially in this kind of environment. So hope that helps. We did comment on SYNC. It's breaking out today. On QCore, if you were not in yet, where would you stake an initial position on the chart? Well, for me, either you got a new buy point developing, and that probably means, God, someday I'll learn how to type here, everybody. But for now, I think you're just pulling back to the top of the base. Here's I actually like this, a nice cup with handle. This is a weekly chart. It's a nice cup with handle. Notice that QCore didn't do anything since January. It's actually just been going sideways. And finally, you break out here. So, you would look, are you within 5% of the top of this base? So if the high is, say, 46.84, 2 points of that would be 48.84. So you're within a buck of being within range of the breakout buy point to come in to buy the stock. And then I think if you did that, then you would probably use the 10-week moving average corresponding roughly to the 50-day here on the daily chart as your selling guide, and that's one way to handle it. So, Equix, I read a story in IBD last night that Equix is actually a REIT, that they're going to turn into a REIT, and some of the movement, because they own nothing but data centers, I guess, and they're going to transform themselves into a REIT, which I guess for them is a good idea. So, once you get into REITs, they say if it turns into a REIT, which might be later this year, it's good for the stock price. If they don't, the stock's going down to 120. I think I would probably leave it alone based on that. I can't understand REITs, and I'm not going to try to. If I'm into tech, I'm into Mellanox. End of story. Nuvasive. That's not a bad-looking pattern, I got to tell you, but it's up there, and don't have any more buy points in here. I think the last buy point you had, I think there's a pocket pivot right there. Is that right, Dr. K, on Nuva? Yeah, that's a
looks like
pivot right there.
that was a pocket pivot just
Yeah, so that was the last real entry point. I don't think that was here. I don't. That wasn't either. So now you're holding up. That's holding up nicely. It makes me think of this one, Neon. Sort of a gap up there, but it's a cheap stock. Don't go out and buy this. I don't think $6, $7 stocks are always trouble to me. Gil, did you say Coinstar is your biggest position? It's one of them. It's not my biggest. Apple had a small pocket pivot. As I've told you guys, and I've been telling you this for a while, and you can go back a couple, 3 weeks ago when the stock was in here, that I liked the story and I think there was some potential. And I think the breakout confirms it. I think you're looking for a pullback to under 68 to be a big buyer here, but I don't have a problem. If you figure 67, 68 is your breakout point, you're in range of the buy point if you're not afraid to buy on a day like today. So, somebody says Apple also had a small pocket pivot yesterday. It did. Apple did have a pocket pivot yesterday, but that's not a pocket pivot because you're way extended from the 10-day moving average. You might say this was a pocket pivot because you're breaking out through this range, but it's extended, starting from a position that's extended from the 10-day. That's this magenta line here. And yesterday you're way extended, so that would not be a pocket pivot buy point. We would not be buying the stock yesterday on the basis. Right now, if we wanted to add to the position we have now, we'd be looking for a pullback below 600. Preferably as low as close as possible to 590. But the market doesn't always do what you want it to do. And if that happened, maybe the market's topping. I don't know. Oh, somebody doesn't understand why ROST did not violate the 50-day moving average. The definition of a moving average violation is that first you have to close below the moving average. So you did that 6 days ago here. Okay, but notice then you have to move below the intraday low of that day. And so you first have to wait for a close below the moving average and then see what happens the next day or in ensuing days if you move below the intraday low of that first close under the 50-day moving average. So this is your first day closing under the 50-day. So the intraday low here is 59.75. It would have to go below that to be a bona fide violation. And if you got shaken out in here, that's not too much more to sit through, especially if you have a 40% profit in the stock. I think that was one of the things that might have worked to your advantage on that, to the person who was asking about how they handled that trade. But that's not an easy one to sit through, and that sort of stuff make you tear your hair out if you don't have a flexible way to handle it. So I think that's really the key, is being able to handle these things properly.
Yeah, I think a lot of these names, when you're using the 7-week rule and you're using the 50-day, a violation of the 50-day to sell, usually they don't break down this hard, and so it's fairly simple to sit through a test of the 50-day and then sell on the violation. Now in this case, it really came through the 50-day pretty hard on volume. So in real time, I could see a trader looking at the stock and thinking, I'm not going to wait for the violation, because what if it goes all the way down to 55 intraday? Which is perfectly fine way to think about this. And so if you did sell it on that day, then it's not a common occurrence with these stocks. Generally, if a stock is a leading name like this one is, it will not break down through the 50-day quite so hard. And then also, since you had such a big profit in the stock, if the market gets a little bit strange, and it's been fairly resilient the last few days, but if, for instance, the model's on a sell signal or things aren't looking quite right, you could switch to using the 10-day as a tighter stop on a winning name.
Yeah. So there's different ways to handle it, but I do think if you had a 40% profit in the stock, you do have some room to kind of let it wiggle around. But I understand in real time, it's one thing to look at things in hindsight and say, oh, I could have done this, I could have done that. But when you're sitting there watching a stock plummeting like that, and the market's getting hit or whatever on news that Obamacare's been not passed but confirmed by the Supreme Court, that could scare you out. But I think the other thing you can do is, if you do get shaken out and the market turns, then you look at other names that might be in better buy positions to participate in. And I think if you were doing that, you could have picked off things like Mellanox, Coinstar, Apple, a number of stocks that were in buy positions, within a day of that turn. So I think that's what you could have done. So the other alternative is, if you do get shaken out of a stock that you did well, you take your profit, now you get your money in your pocket again. You can come after a newer name, and particularly if we're issuing pocket pivot alerts on stocks like Mellanox and Apple and whatever else is out there, you can certainly re-enter into those. Okay, so that's another way to get back on board the whole market trend. NSM is a name that you guys mentioned to us a while ago back in here, and at first I didn't like it, but I noticed that it's held up tight. We saw this sort of pocket pivot move. This occurred on the Russell rebalancing day, so wasn't really sure that this was a pocket pivot because you don't know where the volume's coming from. Just from the rebalancing alone, I don't think that's enough. But there were some that were already trading the volume necessary for a pocket pivot like LinkedIn was before that occurred. But in this case, we weren't sure there, but notice how the volume dries up severely right at the 10-day moving average, and then kaboom, you come off. That's actually a high tide flag, and that's a breakout, so you could have been in it right there. And it's running up sharply, and I think we talked about that when we looked at this a couple of weeks ago. But it looks like the mortgage servicing area is kind of on fire. And that's the other thing. The housing stocks are looking better. You've got some of the materials, building materials stocks acting better, like Eagle Materials, that we were looking at earlier. And I think that this NSM maybe feeds into that whole theme, and it's definitely a strong name. I mean, it's too thin for me. Back then, it was only trading a few hundred and at $20, and it's hard for me to get 20,000 of that, 30,000 of that. So I just blow it off. But I sure hope someone got this one. That's all I have to say. It looks fine, but it's not a flag now. This was a high tide flag, and that was your breakout. Now you're way extended. You're 20% up there. So, Nick, all I have to say is I hope you own that puppy, and my hat's off to you. Somebody says the sound keeps coming in and out. That's because I'm walking in and out of the room. So, no, I don't know. It could be internet stuff. I will be installing a new router here, so maybe that is part of the problem. Web.com is acting fine, holding the 10-day moving average. No real buy points. You actually had a pocket pivot, a continuation pocket pivot yesterday. It stalled out a little bit, so if you believe in that, you bought the position in here, and you have a position, you could theoretically add. Any thoughts there, Dr. K?
Yeah, absolutely. I mean, when you have a pocket pivot and then the market retraces constructively, you can use that retracement to your advantage and sometimes get in at an even better price.
Yeah. I don't. People talk about SXA. We're asked about. I don't like this stock, and I don't like this one either. Cerner. They're just kind of, to me, that's just too crazy and flaky. And there's other stocks I'd rather play. To tell you the truth, I'm almost. If I got to play a medical or a biotech, I kind of favor this one right now. You notice it's slowly moving up as we've been doing this webinar. So, but I think this is kind of tight here. You can use a 23 or 25.46 as a 10-day roughly. You could use a 20-cent stop on this and pretty tight if it doesn't work out. And it's relatively liquid. It trades 1.3 million a day. You can see down here, and I like that. So. Let's see. What do you make of all that? We don't like SXCI. Was TJX a pocket pivot or a viable gap up yesterday, Dr. K?
Yesterday was a viable gap up.
Okay. Yeah.
And
I mean, not a powerful
that's actually
one,
it's still in buying range, so it's actionable here, and it's shown itself to be a price leader, having come from the high 20s all the way up to where it is now.
Yeah, and it's trying to come out of it's been coming out of a new base. It looks okay. You can do pretty well with some of these retailers. Ross Stores has been a great one. TJX has done pretty well. Costco even, we noticed lately, is even trying to break out. As Cup the Panel did break out, and now you're pulling back. So these are actually acting well. What are these telling us about the economy? I'm not sure, but it doesn't seem to be that the world is coming apart here. Let's get to some more questions here. MNST, in my view, once you violated... you could say that MNST was holding the 10-day moving average, but you can see you have some violations of it in here. Right here is one, right here is one, not here. So, you could be using the 50-day as your guide, and even though it went below it the other day, it did not violate the 50-day, but it has violated the 10-day. So my view on the stock is that once it kind of broke down through the 10-day and then violated the 20-day, which is what it seemed to hold, I would just blow it out and wait for it to set up again. Now you got a kind of a light volume pullback to the 50-day moving average. Is the stock, has it gone too far now? I think this is your first stage breakout here, and you have not formed a base until now. So now here you are forming what is really your first base in the stock, it looks like to me. And it's now 3 weeks long. You got any other take on Monster, Dr. K?
It looks to me like it's still a price leader. The fundamentals are still intact. So for those who have been able to sit with it for the last many months, I would be using the violation of the 50-day moving average as my selling guide.
Right, and that has not occurred yet. You have not had, so really you're holding the stock because, assuming you could held through that move. But I would also point out you're 2 weeks down here at this point, and look at the huge volume here, but you close well in the upper half of the range, so that is clearly a supporting week right there. So if this continues to form a base out, you may actually get another entry point in the stock, so it looks okay. We commented on, okay, somebody says, any comments on NSM? Is the 8-week hold rule in effect? We don't use the 8-week hold rule. Do we, Dr. K?
Never.
No. So
I've been aware of it since 1989, but I've never used it in my own trading. I understand the rationale behind it. Just it forces you to stay in a winning stock for 8 weeks. But there's just too many situations, market situations, where it's not going to work. I think it might have worked better in the older days where you had longer sustained trends.
Yeah, and now, a lot of times that's a reason to just take your profit. Somebody asks, am I shorting VMware, CRM, or F5? They would be short targets if I was looking to short the market. But since we're in an uptrend right now and I've got leaders that are going up a lot more than any of these things break down on one day, I'm really not looking to short them. Although you could say that this is a wedging, kind of a weak wedging rally right into the 50-day and right into this level here, which is overhead resistance because you stopped here once before, and it breaks down hard. There's probably some news on it. I haven't really checked it. But I'm not really looking to play the short side. But yeah, that's a pretty nasty move. But I don't really think the volume is all that heavy this morning. It's 10% above average, so it's not like you're seeing massive selling in the stock. So I'm not looking to short them, no. Although I would say that if the market breaks down, this one's trying to break out to the downside, but notice how it's done that before and it rallies up to run you in, and now it's rolling over again. So I don't know if you could, if you really want to short something here, and please go ahead, because if you do, you'll probably get the market to turn around and go back up. But I'm not going to do it. So I've done that one already. Because I tried shorting some of these last week and ended up turning around, covering them immediately, and I think it was on the same day that we're doing the webinar, and turning around and going long by the close. So here you have the same thing happening. You're breaking down. But I think this whole group, in general, the fact that the whole group is weak together, that even is a gap down sort of move. If you wanted to be short something as a hedge, you might throw out some positions in here just to cover yourself on the downside if you're a little nervous. So, but keep in mind these things are coming up with earnings, and there could be they could ram them on you. Do you accumulate before the pocket pivot in a good base? Sometimes I do. I don't always abide by pocket pivots, but I have my own methods for entering stocks intraday. And if you saw me on Fox a couple weeks ago, I was buying Facebook off the 27 level using my own trading method for that. And so if I see volume dry ups, yesterday I thought the volume dry up in Facebook was really nice, and the volume dry up 4 days ago. So when you saw this in combination, I thought you could be nibbling off this 31 level in here, and you're getting a little move off of there. But yeah, I'll do it. It's not if you're rules based and you're going to use pocket pivots, you don't have to. I know, Dr. K, you don't really do that, right?
Well, I have my my tricks of the trade. If I really want to, establish a good clean entry, I will use intraday technique. But again, it's not something it's certainly beyond the scope of what we do to tell other people. Yeah, this is what we're doing intraday, because it just involves it's too much. It's too much for most people to deal with, and it often is too much for me to deal with. So if I'm really busy, I'm not going to even use that technique. But if I have the time, then it sometimes allows me a slightly cleaner entry point and allows me to intraday pyramid as well. Yeah,
I like the tightness in Mellanox, around in here. I thought this was all pretty constructive. A nice little shakeout here. So you could come in a little bit in here, but I'm actually buying some into these pullbacks in here. Not heavy, but buying some. And those aren't really pocket pivots either. So I don't necessarily use those all the time. But on the other hand, it also requires that during the day I may take a position and sell it, half an hour later, and then buy it back and then sell it later. So I may do it 2 or 3 or 4 times, trying to get in the right spot. So Ulta, I haven't really liked this because I don't really like the way it broke down. I think also, I don't know, is this a first stage breakout? It's kind of a sloppy base. Now it's wide and loose, but you notice your pullback last week, you trade in the upper half. Right now you're doing that, so it's just kind of hanging out. Dr. K, what would be your stop on this? Here's actually a violation. This could have shaken you out intraday because it does violate intraday. It does violate the 50-day moving average on the daily chart here. You can see that.
Yeah, not only that, as we talked about it last week, if it goes below the gap up of June 6th, that will also take it below the 50-day moving average. So I would have definitely been a seller, either of those 2 days. First where it went below the low of the gap up day, and then on the second day it violated the 50-day. So yeah, I wouldn't stick around.
I also think Ulta Salons is kind of a old, well-known name. I'm looking for newer merchandise. I like the Coinstar, Mellanox. Facebook is interesting too. You might see LinkedIn come on. You've seen some newer names. Questcor has come on. So a lot of these less obvious, and this one tends to be squirrely, so it hasn't really been a favorite name of mine. Somebody says the sound is excellent for me. It can be a function of your internet as well. Somebody's buying. What's it? AMT? Isn't that the American Tower? That's been doing okay. Yeah. So that looks fine. That one's if you own that one. Biogen also has been acting fine. You get a breakout in here. I think. Let's see. I don't know. Let's look at the. Well, not really. You haven't really had a buy point in this in a long time. Maybe you got a pocket pivot there, continuation pocket pivot. No, not really. You're not higher than here. Not too much in terms of new buy points, but the stock has acted well.
You had one on June 5th, right off the 50-day. You had a minor pocket pivot. June 5th.
I mean, the reason we haven't been all over it is because we think names like Questcor have been better, and we like the fact that just broke out, so we did give you that one real early. We like that one. Alexion also has acted okay, and I'm looking at this one, SGEN, today. It looks like this little pullback looks pretty good after the pocket pivot on Monday. So SXCI has suddenly sold off on volume in the last 15 minutes. Yeah, it seems to be holding up. That must have come a while ago. I have to scroll down. The lousy thing about this GoToWebinar system is that they give you a tiny little window to see everybody's IMs, and all you can see is one line of one IM. And I know there's a whole line of them. So let's see.
The thing about SXCI, what I really don't like, is it's got all these downside reversals on volume.
Yeah.
It's almost like there's some big seller out there. Whenever it goes above 100, it gets hit by this big seller. So that sometimes is a warning sign. Maybe this guy knows something. Maybe he's got some insider information, and it's translating itself into the price volume action of the stock. And maybe the bad news will come out next week, and the thing will gap down on us. I mean, if it happened, I've seen it happen before.
Yeah. Dr. K, here's a question for you. With the negative jobs report, that's not the Steve Jobs report, that's a jobs number, right? Okay, yeah. Bad humor. Okay, with the negative jobs report, do you think the MDM will maybe reverse from the present position of buy?
Well,
now I'm going to choke on my breakfast here.
The model doesn't look at news per se. It looks at how the market treats news, and it also is aware that, as Gil was saying earlier, should unemployment rise above 8.2%, the Fed's going to step in with more aggressive quantitative easing. So I think that puts a floor on the market in terms of serious major pullbacks. But that said, if we start to see a lot of selling pressure building up, and it doesn't matter why, it could be because of the unemployment report, although doubtful, but it could be any number of reasons. The model will then switch out of its buy signal, either into cash or a sell signal, depending on how visceral the selling pressure becomes.
I can tell you for sure, though, that if the MDM goes to a sell signal, it's going to a sell signal. And that's the basic answer. I mean, we can't tell what it's going to do. Yes, the MDM will go to the sell signal in 2.8 days. TransDigm Group had a nice breakout here and pulling back to the pivot point. If you believe in the story, you like it, then you can buy the stock right here because you're within range of the breakout right here. So to me, it's kind of a thin stock. I mean, it's a $140 stock. So what is that dollar volume-wise there, Dr. K?
It's about 70 million.
Yeah,
$70 million. It's liquid
decent.
enough, and it's a $6 billion company. So
so it's liquid enough. Yeah, but the thing is it's volatile. I mean, you can see in the movements here, it tends to chop its way higher. So, but technically it just broke out, pulling back to the breakout point. Nothing else really to say. AEO, what is that? American Eagle Outfitters? I haven't seen that one for a long time. Trying to come out of a base. Doesn't really hit my radar screen. There must be a reason why. I haven't seen that on any of my radar screens. 1 quarter earnings up 43%. No real volume, though, on the breakout here. You don't see any real volume, so I don't think I'm really into this one, which means probably it's going to go higher. DR Horton, that's what that looks like. DHI. This is like the rest of the builders we're talking about. That was the one I forgot to mention. But the same thing here. You actually have a gap up here. And this kind of looks more like Eagle materials, boom, gap up here and then holding tight. So those are good. Those are fine. DHI does. I don't care for your AEO, though. MasterCard moving up in its base, forming a cup, so nothing really major there. V is similar in that it came up, but it's out ahead, so V is your leader. You don't want to have MA. If you want to buy either one of these stocks, this is a breakout here. You have this big pocket pivot type move on the Russell rebalancing. I think, though, you'd want to buy V on this pullback here if you like it, Visa, instead of MasterCard. I think that Visa is the leader right now between those two. Intel is a dog, and I would not touch it with a 10-foot pole. KB Financial, I would not touch it with a 10-foot pole. And what was the other one? Disney. Now, Disney has looked pretty good lately, and you have some nice action in here, and it's holding up fine. So I think my younger sister is a Disney freak. I think during the summer she goes and takes my niece and nephew pretty much every single day, and I'm not sure how she does that, but she's a freak for it, so she's probably the one driving the stock higher. And I think that's great. If you have anything in life that is fun and you're passionate about, whether that's fishing, going to Disneyland, playing piano, or whatever, I think that's a great thing because it just makes life that much more fun. So Disney, the stock looks good, and I guess some new rides at Disneyland have been good. What's really driving this right now? I don't really know. They raise their prices, I know that, but I haven't really seen anything else. But it's acting okay. That's all. Just forget my babbling. It's just acting fine. So if you own it, you're okay. But I don't like the Intel, and I don't like the what was that one? The KB. I got to tell you guys something. There's a problem here, I think, because they're being bought out by Marriott. We found that out, and that kind of surprised us because we like this. And we didn't even know about the Marriott buyout, which is, I think, kind of lame. But all you're doing now is Marriott. It looks kind of the same, in here. But Get's okay. But this is the pocket pivot right here. It just barely clears enough volume right here. So clears the 10-day moving average, just barely pulling back. But I'd forget this because it's a buyout. So we actually have a little bit of this, but we're thinking it might try to rally if the market did. We'll probably just lose it. Dr. K, what's your opinion on point and figure charts?
They work fine. I don't use them. I don't use candlesticks, but candlesticks also, work fine. If that's what you like to use, if that's what works for you, then that I would say stick with it. I prefer the simplicity of bar charts. Just simpler is better. And I did at one time back in the early 90s really get into candlesticks, and then realized that there's quite a bit of information here that probably is unnecessary. So I simplified.
Yeah, some people actually would argue that point and figure charts are less noisy. And in fact, you might say that that's true. I mean, let me just give you something, say a Mellanox, for example, on a point and figure chart. Let's see if I can get this up here for you guys. I'm going to slide over here. You can all see that. There's a point and figure chart on Mellanox. And basically, when you get reversal, so here's a 3-box reversal. So you put in these 3 zeros, but this is, you can actually see that you should have support here about the 69 level on any pullback, but it's actually holding the top here. You would even say bullish price objective was 76, so that was initially met in the short term. And so that's, it does help you eliminate a lot of the noise, and if you operate on, and I know people who operate solely on this basis, to pick out big trends, they can kind of confirm what you're looking at, as well as setting price targets on the upside. So let's look at, say, for example, and this is stockcharts.com, which I think is a great service. And these guys are not anal retentive. They let you use their charts all you want. And so right now what you have here is a breakout, Okay, I think there's an ascending triple top breakout here, and you can see that. There's the tops, I guess 1, 2, 3, and here's the breakout, and you can see that this yields a price objective of 660. So this, based on a point and figure, this right now is telling you that as long as this move holds, and I would say that's what I'm saying, you could pull back to 590, 595, probably 595 on a reversal, and I would probably be looking to add there. But right now this thing is telling you it wants to break out. So point and figures are one way to look at the market. I use them to set upside price objectives and to give me some idea of what is possible. So that's that. Anyways, Merck.
Also, if you want to eliminate some of the noise, I strongly suggest weekly charts. In fact,
that's better, I think. Yeah.
In all my studies, I did nothing but I backtested just using weeklies just to see how I would have done, and I actually did in some cases better, just simply because it eliminates the noise of the daily. That said, I just love my daily bar charts. It's very difficult for me to not look at a daily chart. So even nevertheless, if someone said you can only use weeklies, I think I would probably actually perform a little bit better than being mired with all these daily charts. But be that as it may.
Yeah. And in fact, Bill O'Neill told me once that if he only had a choice between daily charts and weekly charts, he would invest only on the basis of weekly charts. So that said, you can see somebody asking about Merck. You had a breakout in Merck here. So there's your breakout, and it's holding up. So nothing else to think. Dollar Tree is someone's asking about DLTR. Very volatile. I don't really care much for this action. So PetSmart. It's holding up. Volatile little stock, but it's holding up okay. No real buy points. You might call this well, not really. No real buy points, but it's hanging in okay. Had a breakout here, and it's just trending higher. So there's really nothing to do there. RP. What's RP? Real page. Yeah, not anything I'm looking at. Looks like a bad pattern, kind of an ugly pattern. Somebody asked about 1, 2, 3. Was this to www.web.com? We looked at that already. It's not too thin. I mean, it trades 818,000. It's too thin for me, but if you have a smaller account, it might work. Somebody says, people, quit with the what works better or what do you use questions. Please, it's a waste of time. There's no magic way. You must forge your own path. I think that's a good, true statement. So, but I think, people also, you get an idea of what works for us, and maybe that helps someone kind of figure out what works for them. And I have to admit, as a trader, learning from other traders, reading books like Market Wizards or even Michael Covel's book, The Little Book of Trading, where he talks to a lot of different trend-following traders, you can kind of digest what they all do and then use that to sort of synthesize or come to some solution for yourself. And I think that's where it's useful. But I do think that people, we get a lot of questions. You see a stock, it's broken out and run up 10%, and then it's pulling back a couple of percent today, and people want to ask you, well, what do I do? That's kind of a dumb question because, if it broke out and ran up, you got to give it some room. So, have you researched weekly pocket pivots at all? And if they occur, I don't think I'd rely on that myself. Would you, Dr. K? You've never done
a weekly pocket pivot. I looked at it back in 2005 just on a whim, and what I found out was the entry points are just a bit too extended. That's the problem because you have a whole week for the stock to go. And on a pocket pivot, let's say the pocket pivot's on a Monday, and you're in a bull market, you don't want to buy the following week because the stock's already extended. So I would not don't use weeklies for pocket pivots. I would not use weeklies. Dailies will keep it cleaner.
Yeah. Somebody says, who's sending the pocket pivot emails while you're busy on the webinar? We have this little elf that we have enslaved recently, and he's in charge of it all. So Dr. K and I have no idea what he's doing. So.
Well, we had to give our portfolio simulator
they don't think we
job,
can multitask. I mean, come on, we can multitask. So we're sending those out. And somebody says, Gil, I agree. I just don't want people thinking there's a magic way. The beauty of this game is that there's so many different ways to do it. That's true. Yeah, and I think you're making a good point there, Dan, that people shouldn't look so much to copy as much as to learn from other traders and then forge their own way. So it is something of a fine line to toe. So, but you're right. People should not get this idea that they need to be dependent on somebody else. And we're all about empowering people to implement their own trading style and do things themselves. And I think that's ultimate power in the market. We like the new Market Wizards book. It's about hedge fund managers. I have that book. Dr. K actually wrote a blurb for it. I don't know if they used it.
Yeah, they said they were going to use it, but I really like that book, and I highly recommend that anyone listening go out and buy themselves a copy. It is definitely up to Jack Schwager's level of commitment and perfection when he puts together these Market Wizards books.
Yeah. Anyways, somebody asking when we can expect your next book on psychology. The new book's coming out. It's actually in production right now, so it's finished, and we'll be seeing a mock-up, or I guess what they call a what do they call it, Dr. K? A press copy or something?
The advanced reading copy?
Whatever. It's a copy that it's like a pre.
We'll do a proof, and then we'll have an advanced.
That's it. Yeah. So that's coming back, and we deal with psychology there and some other cool stuff. But we like it. I mean, it was fun to write. We wrote it relatively quick. So. Anyways, you're welcome. Somebody thanking us for wanting to teach and help us improve our trading and investing. I just got to tell you guys, my whole view from this is that, I made a lot of money in the markets, and I've had periods where I've made a lot of money and been up, 100% a month or 1,000% a year. Dr. K's had the same sort of thing. And we've had a lot of success, but I have to tell you, towards the latter part of the 2000s, starting in 2009, and running hedge fund myself, I made some really bad errors and some mistakes. And as a trader, after 21 years now, I find the biggest challenge now is not so much the mechanics. I understand all of that, when to buy, when to sell, what stocks to pick, and so on. It's really the psychological aspects. And for me, 2009 was a huge psychological failure on my part, which I talk about in the last book. And my feeling is, if you're a professional and so you're supposedly somebody who's done so well and you're great and some guru and all this other baloney, and you have a major screw up like that, then I think you owe it to the public or those who have followed your career or whatever to actually talk about it frankly and discuss what the mistakes were. And I think the greatest thing about 2009 for me is that it really helped me flush out what I consider to be a lot of big psychological issues that were blocking me at that stage in my career. And I think a lot of you who are starting out as trading right now, starting out in the markets, a lot of your problem is the mechanics and recognizing the right patterns and understanding normal action from abnormal action. But after 5-10 years of that, you're going to know that cold, and instinctively you'll be able to act. And I do think the thing to watch out for, and really this is kind of the direction we're heading in as well in terms of the books that we're writing, is you're going to find that where you start to hitch is your psychology. And I think that one of the first examples I saw this was a lot of guys in the 90s, and Dr. K and I have talked about this before. In 1998-99, we were making tons of money. But Dr. K and I had pretty much started in the early 90s. So all we ever saw was this great market in the 1990s that was parabolic, and there were lots of great tech stocks. The internet was new. There were new developments in PCs and so on. And I just want to tell you guys, you're seeing the market. We're down 165 on the Dow, turning a little bit. I think this is just going to be a pullback that you can buy into. That's my gut feeling right now. So, but anyways. And so for us, getting to this stage now is really a matter about owning our psychology, owning it, H-O-N-I-N-G, not owning it as in ownership, but you know what I'm talking about. And I think that's one thing that you really have to do. And for me, being able to be on this website, doing these webinars, and be able to talk about stuff, and I try to talk about things frankly, our mistakes as well as what we do well. And I've had some colossal screw-ups in my career, so have a lot of great traders. Jesse Livermore went broke twice, But I do think if you're not able to look at it honestly, and I think one of the best ways to do this is you have a website where you're teaching people, and I'm able to use all of my mistakes to help people avoid those mistakes themselves. So if I can avoid, or if I can help all of you or any of you, and this goes for Dr. K, if we can help any of you avoid some of our big mistakes by teaching you and showing you some of the things that we've learned as a result of them, and I think that helps everybody out. And I do think you have to go through life giving back at least a little bit. I don't think every man is an island, and I don't believe in that concept really. I believe there are communities, and I think we have a great community here in VOSI, and it's definitely one where everybody who's involved in the community is able to grow, and that includes us in terms of understanding what throws you guys and being able to better understand our own psychology in the process. Don't you think that's true, Dr. K?
Yeah, I mean, it's endlessly fascinating. That is the difference. What you just said, that is, in a nutshell, the difference between why I'm so passionate about the stock markets versus nuclear physics. Nuclear physics doesn't have the psychological aspects that the market gives me, and I love that. It's always changing, and it doesn't just change itself, it changes inside of you, and you learn more and more about yourself as you go down this trading path. And I don't see a time in my life when I'm going to look at the markets and think that I don't want to do this anymore. I think I'm going to be doing this till I drop.
Yeah. Cue the violin music. Right? Somebody says, "Aw, shucks." But hey, I'm just trying to be straight up with it, and a lot of people ask, why do you guys waste your time? It's kind of fun, but I got to tell you, there is a self-interest here in that. It has helped me a lot. Understanding how a lot of you guys think and a lot of the problems that you run into psychologically has helped me understand and improve my own trading as well. It's also helped us, I think, to write better books. So this next book coming out, a lot of you guys on the VOSI and the webinars as well, the questions you've asked, the problems that you guys have that you're all upfront about asking us, a lot of that is part of this book. So in a sense, a lot of you helped to write the book. So anyways, that's it. My feeling is we're getting a pullback today that you can buy into. That's what I'm looking to do. So I'm looking to pick up stocks like Mellanox and Coinstar on pullbacks, and I did a little while ago because actually while we're doing the webinar, not only can we put out alerts, but we can also trade, which we've been doing. So you can see SGEN is back up 5 cents on the day. What is it? You guys all ran out and buy that thing? Okay, I feel like Jim Cramer, only not as bald. In any case, that's all we have, you guys. So I hope you have a pretty good idea of what we're looking at here. Went over some of our best names. You can look at the taped version right here. Is some of the better things we like, and of course I'm going to just kind of scroll through this list. This is my current buy list of different stocks I'm watching, so I'm going to scroll through it. So if you're looking at the recorded version of this later, you can write that down, go through some of those names, and maybe you'll have some questions on some of them for us next week, okay? But this is basically my buy watch list. It's pretty broad. There's a number of names, but then I kind of filter it down into this. Another one I should mention real quick is I'm noticing Yelp. Nobody asked us about this one today, but Yelp is coming up. It's a major short squeeze. I think there's almost 2 million shares of this thing sold short on a 3 million share float. And all I have to say is, who's dumb enough to short a stock with a 3 million share float? Not me. And but that thing's starting to come up, so it's something to keep an eye on going forward. But that's another name that you'll see on here. Anyways, that's all we got, guys. Thanks for showing up, and good luck today. We'll catch you later.
So long, everyone.